Hello, and welcome back to Smart Credit Bytes, your weekly space where banking finally makes sense. Today, we are going to learn a topic that can literally decide the fate of your loan application, CIBIL score. And this is a must know topic for all. Either you are a banker, finance professional, or a business owner, or an individual. You need to know about CIBIL score. So, now tell me honestly, how many of you believe that CIBIL is just a three-digit number? Let's say 750 is good or 600 is bad. Is this the end of your story? Okay, let me burst that myth right away. CIBIL is not just a number, it's like your financial Aadhaar card. It tells the banker who you really are when it comes to money. Do you pay it on time? Do you take on too much? Or do you run away from obligation? Or are you disciplined? And today I will take you right inside a banker's cabin to show you how we actually read your CIBIL report, what make us say yes, and what make us quietly push your file aside. So CIBIL started in 2000 as the first credit bureau in India. Okay, imagine the early 90s when you walk into bank, apply for a loan, and the banker has only your words, a few papers, and gut feeling. Many loans went bad. Banks needed a system. That's when CIBIL entered like a black box recording every customer's credit history. Now you may think why it matters now because every loan, every EMI, your all the credit cards bill, all are reported here. Okay, think of it like this. Every time you borrow, you are writing a new diary entry and CIBIL keeps the diary safe and only we the bankers can read it. Do you know how your CIBIL score is calculated? Okay, let me break it into five factors, but with small stories. Okay, so first is payment history. It comprises 35% of your CIBIL score. Missed one EMI, fine. But if you miss the three EMI in a row, that scar stays invisible for years and at least 5 years. Second is your credit utilization. It comprises 30% of your credit score. Let me give you an example. Once a client that had two credit cards, both were maxed out. Though he paid EMIs utilization 95%, but his score kept falling. Do you know why? Because it showed stress. Never use your credit card in full. Third is length of credit. It compromises your 15% of score. A 10-year-old credit card, even if unused, makes you trustworthy. Now, fourth is credit mix. It compromises of 10% of your credit score. Only personal loans equal to risky. So just take a mix of secured plus unsecured loan. This looks healthier. Now, fifth is recent inquiries. This also affects your CIBIL score and by 10%. So let's picture this. You apply at five banks in 1 week. Every banker sees those inquiries. The impression. This shows that you are desperate to take loans. I have seen many people giving their KYC documents in mall just for credit cards, just for some free credit card. But how this affect your CIBIL score, you will know once after a week you take out your CIBIL. It really drags your CIBIL down because every time they don't give your CIBIL score, your KYC in one bank, they give it in multiple banks and they keep on checking and you know what is the worst part? You even don't know your CIBIL is having so many inquiries and this literally falls your score. So next time you wonder why your score dropped, just check these factors. So let me tell you something most borrowers don't know. As bankers, we don't just see the score. We open your full report, suit filed, willful default immediately. This says us no, a big no. Settled accounts, this gives you a huge negative, means you don't pay in full. Write offs, these are like scarlet letter. Multiple unsecured loans says, oh no, this is risky profile. Just think twice. And recent inquiry says, maybe he is thinking of doing something fraud, or is it too credit hungry? And this give you as a credit hungry tag. So banker psychology says one settled loan in your report speaks louder than 10 loans repaid on time. It tells us how you walked away once, you might do it again. Business had a strong turnover, but promoter shows CIBIL shows two settled personal loan. You think the application will be approved? No, straight away rejection. And another had average balance sheet, but the CIBIL was 790. And you know what bank did? Immediately approved the loan because they saw it. He's disciplined every time he borrows, he repays. And after our funding, his balance sheet will definitely improve. Now ask yourself, what story is your CIBIL telling about you? Now you may ask why it's extra important for MSMEs. So let me tell you, your financial fund are weak because of certain reasons. Your business is affected by certain factors internally as well as externally. So MSMEs often lack audited financial formal credit history. That's when banker lean on promoters' personal score. Being an individual promoter, your CIBIL score matters to us. Imagine you are applying for a 50 lakh loan. First page, banker sees his promoter CIBIL. If your file is poor, file rarely moves forward. Your balance sheet shows numbers. Your CIBIL shows character. In MSME lending, sometimes your character weighs heavier. Okay, let me break some myths in simple style. Okay. Suppose a myth is checking CIBIL's lower score. No, self check has no impact. These are soft inquiries. You can go anytime on CIBIL's site and check your score. These are just soft inquiries and they do not impact your CIBIL score. Yes, but if you give your CIBIL to some lending banks or these financial institutions, this definitely lowers your score. So now second myth, okay, once bad is always bad. That is true. But in gradually with time, you can say 12 to 18 months, it can improve. So once due to certain condition, if you think your CIBIL has gone wrong, just don't be disappointed. Repair it. Pay every loan. Don't max out your credit cards, and slowly your CIBIL score will improve. And some people say that closing old credit cards improves your score. No, it reduces your credit history length. So this is a very bad idea. More older your credit card is, and more good is your score. So here's a practical step-by-step guide from my side to improve your CIBIL. Just pay on time, automate your EMIs, keep your credit card uses less than 70%. Don't apply everywhere, choose carefully, at least not in the malls. Don't give your KYC document easily to anyone. Never settle your loans. Negotiate properly instead. Keep your old accounts active. Take a small secured loan if needed. Repay well, score will definitely improve. Think of your CIBIL like your fitness score. You don't build a six pack overnight, right? Same as with the credit history. Small good habits always add up. A strong CIBIL won't guarantee a loan, but a weak one almost guarantees rejection. Never let a three-digit number block your dreams. If your score is low, it's not the end of the world. It's just feedback. Start today, build discipline, and in a year, you will thank yourself. Your score will improve gradually. So, this was my episode 8 of Smart Credit Bytes. I hope you now see your CIBIL not as boring report but as your financial mirror. Share this with your friends who are planning to take loan. You might save them a heartbreak. Until next time, stay credit smart and stay confident. Thank you. This is Sangeeta signing off.